Welcome back to Market on Close. Watching U.S. stocks into the last 15 minutes here. Will we get an extension, a little FOMO end of the weekend, or fade it? Let's talk some Bitcoin and gold, too. Bill Baruch is joining President at Blue Line Futures. Bill, there's been a lot of exciting stuff this week, but the excitement in Bitcoin stretches back before the action this week, as it was already outperforming U.S. equities since August. To me, that's been a really important part of this. What does it mean to you as a trader? I know you've watched Bitcoin for some time.
You know, it doesn't really mean a whole lot because, yes, you need Bitcoin in your portfolio, you need some gold in your portfolio, but it's not going to be 100% of your portfolio. And that's the way it is. Yeah, so this is breaking out. And I think you didn't have to pick a bottom through the summer or earlier this year. What you wanted to see is August, this thing wanted to break out. It came back, retested the trend line, been very constructive, and it's ripped higher. I think as long as it holds out above 1450, 14,500, I think the path of least resistance is to new all-time highs potentially over the next year.
So you think we could get past the big bubbly 2017 craziness in BTC?
I would not be surprised, and you know why? Because of what gold has done. And listen, I think gold should have more weight in your portfolio than Bitcoin, but you don't need to choose between the two. I think that gold has already worked through a lot of this. I think you're going to see silver higher too. But in the end, gold is higher because the debasing of currencies around the world. Bitcoin is now moving because it's stabilized. The fear, I think, earlier on was the fact of that fallout that you just pointed to. It had to become a more stable asset. And I think it started to prove that, and that's why Bitcoin is now waking up, because it has proved that it can be a stable asset when needed.
Okay, well, that's where it seems that to me, the stock connection's pretty important. I mean, we've seen Bitcoin trade with the 30-day correlation. I just pulled it up here on the platform. We were near a 1 correlation with the NASDAQ and Bitcoin since like January. I mean, the thing was a lockstep for the NASDAQ and then started to break down a little bit in the summer and then broke down again these last couple months. Every time there's been a big market sell-off since Bitcoin's been publicly traded, Bitcoin's gotten blasted even hard. But it doesn't seem like that happened when we dropped pretty hard in the NASDAQ in September. Same story in the grind for October. Does that mean that if we do get another hard sell-off in the NASDAQ, let's do a hypothetical here, do you expect Bitcoin to outperform again?
I think the really big question there is, what does the U.S. dollar do during that time? But yeah, I do think if there is a risk-off move, you're going to see Bitcoin take a hit. You're going to see gold take a hit. And that's really what matters. And the U.S. dollar has now become the safe haven of choice. And that's obviously tied to central banks and the Fed and what's going on there. But now that I'm talking about currencies just a little bit, Bitcoin being a currency, gold being a currency, Chinese Yuan. I mean, the Chinese Yuan has rallied 7% since June. And the Chinese Yuan, you know, that's a really big move, and then I think there's another 3% to go. So that is really a big pulse of risk on. And then not only that, talking about the metals and shifting from Bitcoin for a second, but the metals, China is talking about in 2021, they're going to have their big plan is adding to their strategic metals reserve. So I think gold, the fact if gold continues higher and the U.S. dollar remains depressed, I think that looks good for Bitcoin. But yes, I do think if tech comes back in and if risk assets in general are not able to rally, it could hold Bitcoin back as well.
Do you think gold's move this week, because I like the thoughts on BTC here, that trend has been pretty consistent, but gold looks like something finally woke up. I mean, gold since August has been pretty rough. We had a hard sell-off, then we grinded to the side around 1950, broke through that, couldn't get back above 1950, and then we just snapped that on Wednesday. Does that mean we're restarting another push? It sounds like you think that's the case.
Well, yes, I think it was totally foreseeable to see gold come in the way it did. Now, you had a monthly close for September that was a spinning top, and that really it laid the groundwork for continued selling. The U.S. dollar had stabilized during that time, and overall, the equity markets were cooling off too, because gold has become a risk asset. So a lot of that consolidation really took place above the previous record high in gold. So where gold has been out above that previous record high, Bitcoin has yet to do that. And that's why I think gold's path is really important here. And what I do imagine, this is really a seasonally soft time of year, but I imagine gold continues to be constructive. The really strong bullish time of year for gold is December. And it's some statistic that if you buy gold the second half of December and you hold it through the end of January, you've made money something like 14 out of the last 16 years. So I really expect the groundwork that was laid through September and then now through October, out above the record highs during a seasonally soft time of year, lays the groundwork for that new record high. And I expect gold to make a move to $2,300 in the first quarter of next year. But as well, we've seen a very good constructive technical pattern on the monthly chart. After that monthly spinning top, we're seeing a bull flag develop, and that is going to be very bullish if we can start moving in above 2,000.
Okay, Bill, the technical description here of what to expect on the chart, I like that. I'm curious if you have sort of a fundamental view of what could cause such an event. I know you mentioned the dollar and the role being played by central banks. Jay Powell this week said he basically wants to just kind of stand by and do what they've been doing, which is let the economy run. So what impetus then could cause all this to happen? Do we need to have an announcement, in your opinion, from a policy side soon that says there's a lot more money coming back in to push that dollar lower and the subsequent trades in gold and BTC that you're describing?
Well, absolutely. I mean, I think moving away from the fact that the market profile has shown that it wants to be bullish and has attracted the buyers,
okay,
I think you're going to now see that the U.S. dollar continue to weaken. And it's going to weaken for one of two reasons. Either we get a lot of fiscal stimulus, and if fiscal stimulus is not enough, we're going to start to see the Fed introduce new stimulus measures too in the first quarter, and then we're going to get inflation. On top of that, I think China, which has come out of the pandemic recovery, much better and much quicker because they were the first ones in it, they may have been a little more prepared too, but that's neither here nor there. But overall, you're going to see, I think, China be a big buyer in gold. I do think you're starting to see there's some news. Bloomberg reported yesterday that there was a Russian trading firm that's starting to increase their gold holdings as well. So I think you're going to start to see some of that. And this comes after central banks were net sellers for their first time in years, and I think it was October or September. But you're going to start to see that shift come in. And it makes sense to see some of that selling from a new record high. It's held ground, and you're going to start to see that shift come in. And again, I can't emphasize the Chinese Yuan strength against the U.S. dollar enough, because a lot of people don't look at it on their charts because it's not really a tradable asset in many places. So the Chinese Yuan, though, if that has more upside, China is going to be able to buy more gold priced in U.S. dollars, and that's going to be a big tailwind coupled with U.S. central bank stimulus.
All right. I think viewers are getting bulled up on gold after that. Appreciate it, Bill. I like the case here. I like the combination of the technical profile and the potential for more story and action and events to come into play as well to help it get there. Good to have you on the show. Appreciate it. Bill Baruch joining us from Blue Line Futures.